morning, class. Welcome to Homeroom with Unc and Market Monk. Morning, P. How was your week?
Really good. It was good in a couple unexpected ways. I was just trading some puts, looking for a level, and it stuff went further. AVGO, I thought it was going to work its way down to 1200, but I thought that would happen 2 weeks from now and not Friday.
Yeah.
So yeah, I think for me the puts thing, any big wins there, I have to treat it as rare and not have it become a strategy because that would just change so much about what I do. They're kind of just trades of opportunity rather than big plans. So did that. Kind of chilled in some positions and oil and some metals. Those have been really good. Crypto gave a lot of opportunities. Had kind of a pullback into the halving, which a lot of people didn't expect, but coin responded well around some spots I thought it would. So it's a good week overall for me.
I said definitely previous winners stuff I've been watching week for me. Good old DJT took a little piece of that, and HUSA Go EV Go EV's kind of been my just go to. Get a little cut fill every day or every other day. That playing back to the level I have, and then airlines turned out okay. Didn't get a bunch out of that, but just an overall good sector read and um, yeah. So kind of small for me, staying on that. These down markets, I don't try to get too crazy in or try to call the bottom or call the top. Um, but definitely more, like you're saying, pullback on Friday than expected. Just kind of weakness in the volume still overall, and that April theme of April never really being a good month kind of coming to fruition so far.
Is and Go EV, is that kind of a sector anomaly, you think? I mean, it because I mean, obviously EV's been struggling. You had Rivian hitting all-time lows, and so what's moving that? Just kind of news and volume.
Well, I said it with the weed charts. I think it's CGC. It's a little early over here still, but it's those ones that reverse split and then you get any kind of news. Hut was
Yeah,
like that as
yeah.
well. Hut was like that as well, where um, it's just there's less liquidity, so it's playing back to a range, probably a little on the oversold side, but just super liquid after a split. When you split 20 to 1 or whatever it was, there's just not as many shares out there, and your range is going to naturally get wider. That's just how that works, because of the less
Well, you know
shares. Go ahead.
who's going to do that next?
Who
Is
do you get?
Virgin Galactic
Yeah, that's
in
probably
a
why you
reverse
got that
split.
read. That's probably where that read came
Yeah,
from. Because I was like, why does P like this? But that makes sense. And it's usually the first. It's not like when it reverse splits. That's a bad idea. Don't play that. It's when the
yeah, yeah.
it's when the first news event happens, and the range
Right.
just kind of gets really wide. To be honest, Go EV for me, it's because I'm playing off of a level. As soon as it gets respected, I kind of can just play percentages back to it, and I'm pretty diligent about just taking money out of it. So then you get a couple weeks into it, you understand level two, you know what you're looking for on the volume side every day, and yeah, it's just that previous winner theory we always talked about.
Just that Go EV reaction that was just it was just instant. Like you asked me, saw the flow. I was teaching while I was looking at it. I bought some while I was teaching. I rarely do that. It wasn't big or anything, but and it just it just took right off within 15 minutes. So that was pretty cool.
Yeah, and that's
Um,
I mean, my midday stuff. I'm usually looking at level two time and sales, and I'm like, all right, this is gonna have a good day. Is it gonna have a good week? And that's why I ask you, because I'm trying to see if they're positioned for. It's more of like, where's the insurance at for these guys, right? Like, are they above or at my level? And how much movement this could possibly have. And I've always said that I used to use the football field analogy. Like that's what the lines are. They're the out of bounds on both sides. And I like it when we can run all the way through one of those lines, especially if the whales are anticipating it, and that's kind of
Well,
what happened there.
and can be a good thing when they chase too, because that means is that pullback is going to happen. It always is going to happen, but the pullback's going to be to level that makes some sense on the chart that we already have written down, and they're not going to let it fall too far below that because they're they want to keep UC relevant or whatever it is, and you get that secondary bounce. So and so that's where the re-entry part comes in, and it's just so much better. I mean, this is even more so on the option side too. It's like it's so much better to re-enter, just hold your contract through a pullback, because that's just brutal. I mean, you're watching before $500 disappear in the hope that it gets back to where you just were and then goes higher. But who wants to do that? I don't like doing that. So um, so yeah, that's where you're just trusting the process that you can get back in something comes into play.
Yeah, and that's GoEV is a good example of the first move was better than the second move, but again, we had the levels respected both times, and for me, that just is setting up where I'm taking profit or putting my stop loss, whichever side of it we're on. And outside of Friday, GoEV just got back to 326 every single day. I guess a little short, three
Yeah,
cents short on Thursday. But I mean, it's not respect the lines for any other reason than to continue to remind myself that, hey, this is where we're going to go and you need to take money by here. Is this from here to there, is that enough percentage? And then it just turns into
yeah,
watching buyers and sellers in level 2, and I don't watch the 1 or 3 or 5 shares, especially on these guys. I got my filters up to my lower corner is 1,000. I'm only watching 1,000 shares down here, and then on the side I got it down to 100, sometimes 500 even, depending on the stock. So I only want to see kind
yeah.
of big size orders. That way I'm not watching the matrix, and you just see red green after a while. You see where buyers are defending, um, and sellers are selling, and you kind of just play in that pool. I haven't brought that up in a long time, but when I first started day trading, like I had a really diligent system, um, where I was like, all right, I'm going to get $1 out of this stock, or a certain amount, and the the overall market people would take money way before me, and I'd never hit my target. So I tried to figure out where they were taking money, and then adjusted my
Yeah.
sizing accordingly to that. And I mean, that's the basis of it all, is just trying to swim with the big fishes. When they eat a seal, I get a piece of fat. It's that simple.
Yeah, absolutely, and it's made a lot of sense to me. I didn't really used to pay a lot of attention to volume. I mean, option volume to some extent, but a lot of the stuff I read doesn't need a lot of option volume to move. But it's definitely a different kind of trade on lower volume stock. And yeah, you just have to be way more careful. Usually, you have to buy more time, but it's just so much smoother to be in something that has some has some volume
Yeah.
behind that push, because you can sell on the way up. You get these, the premiums start to juice when you get in early. There's just so much that's better about it. So I am much more mindful of that, and I can say too on Twitter, when I see people alert really low volume micro caps and stuff like that, it's so obvious what they're trying to do with that. And those those days they're kind of back to some extent with some of those dudes pumping again. So
What really got me into volume is, when I was learning what setups I liked. I don't talk about it a lot now, but because we don't run across those situations too often, because it's not the 2020 market. But the T2, the settlement dates. If a stock had super high volume, it's gonna have to like settle that in the next 2 days. So usually you would get this big move. Some of those stocks ran from like $5 to $12 in one day. Then they'd pull back, and as long as the pullback wasn't like significant, usually we're going to get another good day 2 to 3 days down the road. So that's where volume
yeah,
first came into it for me. Um, and then just through trading. You ever trade some low volume stuff and try to get rid of 700 or 1,000 shares? Because it goes away 5 to 30 at a time. I mean, it'll take an hour and a half just to get
Yeah,
out of the position, even if you can get all the way out of it at the original price you're trying to get out of it. Where the high volume stuff, they just take everything you have like in a blink of an eye. You're lucky sometimes if it doesn't just all go at once. And the FOMO does kick in those situations. You're like, oh, I could have put it 10 cents higher, but um, I don't care about the top on stocks. They'll all come back.
yeah,
They'll all come back for you. What's up, Nvidia?
yeah, right. Yeah, SMCI. I felt stupid selling at 1,000. I don't feel dumb now. But yeah. So the in the option version, what you're talking about is the big spread, and
Yes,
you
yes.
get and you get it's deceptive because the price they say that you've gained is the mid price. You can't always sell for that if if that spread is wide. So the I do trade some stuff with the big bid ask spread, but the thing is, what I'm trying to do, I'm trying to get a really low fill near that bid price, and then when I need to get out, even if I'm selling at the bid after it goes up, I've still made money. You get a bad fill, you're down 50, $75 without the stock even moving, just because of the way that option is constructed. So you just have to be extremely careful about the bid ask spread. And, you can't slap the ask on anything but really like, Tesla or Spy or Apple or, whatever, like, where the spread's $2 and not 70. So that's another area where options get complicated.
It's a sa-
I
it's a
wanted
s-
to
it's the same on the share
go ahead.
side.
Yeah.
Real quick, it's the same on the share
Yeah.
side. If you have a spread, like you can't if you're trying to get filled at the 5 cents below the spread or at the smaller part of that, again, you're just not getting filled. You'll be lucky to get like 50 shares, and so you kind
Yeah.
of have to wait for that volume, or like you're saying, you're down, 50, $100, like as soon as you get filled on the upper end. And yeah, volume is, it goes back to that Apple cell, and I always talk about, you just want to be where the action is in the market, and volume is the action.
Yeah. And then and my last comment on that is especially on a Friday, when like I'll catch a big move down, you know, right at open, and people will say like, well, maybe I enter calls here. I can tell by the volume that there's a limit to how much we're going to recover today. Even if, like, last Friday was kind of an anomaly, but most Fridays where it's, you get one or two decent moves and then the stocks kind of find equilibrium. And that is a disaster for options trading because when the stock starts to quiet down like that, your premium just starts to bleed out. $5 here, $7 here. You're just sitting there in that thing, and that's just you don't want to be there. Which is why it's so funny to me that so many of these gamblers don't wake up the market open, because really that period is the best time for what they try to do. They enter when stocks get quiet, they chase news, and it's just the setups just kind of die, and then Monday, we're right back at it. We make some dramatic moves. So that's the part of the options trading too that is really important that people don't think about.
Yeah, I don't say it much, but I think it was Carlos asked me a few weeks ago, just talking about volume. But with that first hour, and I think it applies to the option side as well. I'm looking for like 30, 50% is even better. The market kind of depends on how slow or fast it is, but in a good market, I'm not trading anything that doesn't have 50% volume of the 30-day average inside the first hour. That's all I look for.
Yeah,
That's like a big check for me, because I can just get my entry off of a level. If that hits, I don't have to worry about taking profit at pre-market high, because they're not going to be able to keep that in the box because it's going to have more than 100% daily volume. And if buyers stay in, it's just going to ladder up all day. And that's just an easy check anyone can do, is just look at the 30-day average of volume or even the last 10 bars and say, all right, this is going to have above normal volume for today, and that's what moves price. It just does. Um, the Apple selling analogy is one of the best ones. I mean, if he's not selling anything, he's giving you a discount, and if everybody wants an Apple, he's selling each one for a premium, and that's just this. It relates the same thing to shares.
A couple of observations from this week that I got a little frustrated about, and I'm not I'm not mad at people or whatever, but it's like for them, I want them to kind of pick up on what we're putting out there. And one of the things over the past couple of weeks, we have recognized that conditions are changing. Could be short lived. Who knows? All I know is I woke up on 500 puts SPY for May and the 480 ones for July, and that was kind of a simple basis. And then I said ASML, huge ER report. If that's bad at all, it's going to pull back semiconductors to some of our spots, and that happened. And I'm not saying in that environment that I want people like, okay, switch to puts now, go full port puts or anything like that. But you can't come back to the market with like the same approach that you've been using this whole run up, where it's like, what am I buying today? This looks oversold, and you kind of throw words like that. I'm going to add here. I'm going to add this. I'm going to add that. Just the assumption that everything's just going to bounce. Um, Very dangerous approach right now, and that's one thing. The other one is after the stuff that I post that has bounced, like add coin at 210, 207, whatever, and it works, then it works the next day. I don't want to ask me about buying coin when it's $223 on the next day. We're way off from where we were. So that whole thing, like being late, FOMO, all that stuff. I want people to kind of start to get past that and ask the right questions for the environment and show me that you've done your homework. That's kind of where I'm at with the room. So I get a little frustrated with some of that. So I didn't know your thoughts on what you see or what your what people should be doing as the environment changes like this.
Well, I guess between me and you and other people can hear it, so they're fully aware of it. But I figured out a long time ago that if I'm 100% all the time, it's going to be too much information. They're only going to listen to half my thoughts that confirm their bias. So
Yeah.
I try to put in. It's two pronged. I try to put in as much work as anyone else is going to do. So if you're just throwing a random comment to the moon, I'm that's all I'm going to give you back. And then the other side of that is I'm going to continue my commitment and relationship with you and the work we do because I use that work. So the room to me is secondary in that regard. If someone wants some help, they want to invest a little time, and there's several people in here that will vouch for it. I'll spend 5 or 6 hours with you on the side. I will, if you're going to put in the work. But if you just want to show up and me to give you an answer, not going to happen because a lot of the little things are more important than one goddamn trade that you're trying to win. It's a bigger picture of building skills, understanding things, finding repeatable things that will work for you in your lifestyle. So, again, it goes back to just whatever you're willing to invest, I'm willing to invest. And that's really eased my mind with how come you didn't get it? I've been posting it for 3 months. Like it's let me
Yeah.
let go of that. I mean, you remember how hostile I used to be, and I've calmed down because again, I focus on what we do as our relationship or partnership more than I do anything else in the room. And then when someone asks for help and has time, again, for every shovel of dirt you dig, I'll dig one with you, and that's really helped me.
No, I think I can see that. Part of it for me, I guess the teaching background, especially teaching an open enrollment college, which you can imagine what that means for students coming in and where they're at with their skills and all that. You do have that idea that like I want to try to reach everybody. And I, me personally, and we haven't had this happen in a while, but there's a limit to how much I'm going to watch someone lose money when they're not doing anything we talk about. It's like the room's not a good fit for you, so enjoy, have a nice life, and just because it just you just move them on, because I'm just not going to be not going to facilitate in any way that stuff. And then they get frustrated. They'll blame us, and they're not doing anything we talk about. So there's been people like that. But I'm not really seeing much of that. But I do see. It's like I can tell someone hasn't read much. They haven't watched the videos. They haven't not listening to a lot of what we're saying. It is not an environment at all to chase anything. And then just the observing things about stocks, being like really surprised that something happened when it's just basically the result of a turn in the market that we've covered extensively. It's like, well, they're not paying attention, and
Hey,
so that gets to me a little bit.
it's a year or two ago, someone asked me, you like 3 months after being in the room, maybe even longer, all you trade is shares, Unc? I mean, I would have lost my goddamn mind, and I just laughed that one off. Like, yeah, you just told on yourself. Like, if you don't even know
Yeah, yeah.
that basic part, you're not spending any. I don't even think you've watched one full voice session. I mean, how do you not know that I'm only a share trader? How do you not know my sizing and position, like what I'm trying to do? Because I go over that every 3 or 4 months. That's never going to change. Trade with 45K. It's three positions of 15K. It's just set up that way. I try to make $1,000 a day. It's real simple. Like, I mean, it just doesn't change, and that consistency is what I try to show people, and the same with our work and my work. And I know you're very consistent, but we do the same thing every single day. And you just kind of, it's like going outside at 6 o'clock in the morning. Eventually, you can figure out if it's going to be a sunny day or a rainy day because you're doing it early and often.
Yeah, absolutely. So
Yeah,
one change that
yeah,
I
getting getting
made.
getting some meat of what you're mad about, P.
Yeah. Well, so my whole approach, when the market kind of shifts like this, is I do think we need more context for individual sectors. And my approach to that used to be when we were in just a really bad market. I had sector notes every day, every sector. This is what I see, and those. I mean, talk about timestamps. Go back, look at what those stocks have done. So I'm bringing that back. I'm bringing that back to in some ways because I do this anyway. It's just I write them in a way that would only make sense to me. So I have to kind of I kind of contextualize them. I'm a prolific note taker. I'm a writer, all that. So it's not really that big of a deal for me to put this out there. What I want people to see when I do this is that there's some complexity happening in sectors right now, where one little corner of it is like massively bearish, and then there's these little spots, there's these little bright spots, here and there. So it's the market conditions that are leading me um, to do this, and I just really want to emphasize for people that the you got to recalibrate what you think of as a stock being cheap. SMCI is not cheap right now. And we're so far from my line that I mean it could go retrace to the upside, sure, whatever, but it's got kind of a long way to go too. So you're just walking into a disaster if you don't prepare. So if you don't read my notes, read Unk's notes, watch the video, don't make a trade on Monday. Just don't do it until you've done your homework, because otherwise there's really no point you being in this room if you're not gonna do that. I don't know everything that's going to happen with every single stock, but the work that I put out there um, should give you a corner to specialize in, and that's what I want to see. I want to see people build a style and an approach and a specialty that I can see instead of just random questions about buying this, buying that. What is it that you're trying to do? And lastly, the idea, like, people want to know what strikes I'm buying, but and I can talk about that, but the thing is, like, probably not entering the same trade as me. You might trade way bigger than me. You might trade way smaller than me. But I'm doing something that works for me. It's calls with some time off a level, short expiration puts to a level or to protect positions. But that whole balance and that combination, it is fairly complicated, and you can't just buy a contract that's half the price of what I'm buying. It's further out of the money. That's a shorter expiration. You're not in the same trade. You got to just pick a cheaper stock. If you're not putting up 600 to 1,000 per contract on a couple of these, Elf or AVGO or whatever, you just can't trade that because it's just not the same. Just not the same trade. So focus less on copying me and focus more on doing the doing the work, finding your style. That's what I would say. Use the work.
From I guess the outside looking in on the option side, I mean, I think a lot of people they they're just fucking greedy. I'll just say it. I'm sorry. Like they don't have a
Yeah.
lot of time and they're greedy, and that coupled with I need confirmation that the trade is going to work is just a recipe for disaster, and I see that a lot of times. The skill set is what always drives me crazy. Is like coin's probably the best example at this point in time. You've traded coin for over 2 years. Like fully
Yeah.
understanding how those contracts just work in general. Um, will you please, not you, but anyone listening to this, will you please watch list a couple coin contracts for 2 weeks before you trade it and see if it even works for you? Because I mean, that's the better play is to actually understand the option and if the amount and the movement even work for you. And if you don't have Sunday or you don't want to commit Sunday like we do, there's no problem with listening to voice on Monday or Tuesday and kind of trading towards the end of the week for the next week, following collabs throughout the week, seeing what flows because we reread things all during the week. And those
Yeah.
trades might be better for you so you can sell on Monday instead of waking up and buying on Monday. Kind of flip that script a little bit instead of just coming in Monday like I got to trade something. Well, if Monday's the start of your week, start working that instead of clicking buttons. Like start getting the information, looking for setups. Oh, this pulled back. Is the read still there? And you can simply play relief on a lot of things in that regard. Our system, though, in general, has always been built on being early. Like we don't really come in here many times and saying this is going to moon on Monday. It's just what's setting up over the next couple weeks in the flow. And that
Yeah.
first on the bus, first off the bus, just works for me, and I think it's a safer way to trade. So you have time, but you still have to spend a little time going over things. And coupled with, I don't need confirmation of it already moving. Your best entry is going to be a red candle, not a big ass green one. And then you say, is it still good here? That just ain't going to work. Square was the recent one that just pissed me off. I really got mad about that because I bought it all the way down. Didn't really say anything to the room. When we got back to 60, I had the flow read over and over and over again. And when we get up to 80, 84, 82, 77, people are like, "Do I buy Square hundreds?" It's like, "Where have you been the whole goddamn time?" I mean, I'm up.
Yeah.
I'm already up 100% in the damn trade. You should be up 20 or 30% in this trade. And it's that kind of is what always is telling to me that you need confirmation, you're not willing to work, and you're probably fucking greedy. Um, swing shares if that's you.
Yeah. And this is where the to it not through it phrase I have comes into it, that we get the pullbacks below the line. Often they're very aggressive, and this is what coin is doing. And then it's like, okay, I'm gonna trade it back to 220, and then it does break through that for a little bit, like at 223, 225. It's not going back to 250 right now. It's just not. I mean, there's nothing. Bitcoin would have to just shoot back to all time highs for coin to have days like that again. It's just not in the card. So that's why like you enter over 220, you got $2 of upside, and you got about $10 of downside.
Yeah, yeah.
So that's not where you want to be. And then one specific example of a setup I traded over and over that on Friday I just it's like I'm out. We're gonna have to see. Look at Elf real quick. Elf all week I traded back to that line at 168, and you can see exactly how it reacted. Pretty much every day of the week it made a recovery back to that line. But then on Friday, the bottom dropped out, and it's just that line is not really relevant right now. So this is a good example of where cheaper is not better. And I don't know that anyone did this, but I hope they didn't, where it fell. And it's like they just keep buying and buying and buying on the way down. It's probably going to 150, 145 from here. So you have to be really careful about that. And this is where, like for me, cheaper is not better because the setup's gone, and then we need a flow reset, and we'll kind of see where we go from there. So be really mindful of. I think a lot of stocks are going to do something like this. Snow's the same under 150. It's probably going back to our spot in the 130s. So just wait, just wait. It'll be great when it gets there, and then we go from there.
Yeah, we started our thing in bearish market trading the backside of trades. It's doable. You can trade the backside, but you really have to be diligent about taking profit and saying you're wrong quick. And I think those
Yeah,
skills that we built in that market help tremendously in a bullish or a flat market. Um, I mean, we've been anticipating some sort of pullback for a while, so I don't expect people to sit on their hands. I don't expect everyone to have the luxury to sit on their hands. But you do have to have a
yeah,
bigger picture, and maybe that's a good time to trade some of the boring stuff or some of the stuff that's in a hot sector, gold, silver, that is a little behind. What's up, sand?
yeah.
And on a level, because then you're going to really understand that if I trade things on a level and not in the middle of a zone, that it's not going to fall apart on me, no matter the market conditions. And then you'll start looking for that and uptrends in the sector. I mean, you just got to temper expectations depending on what the market gives you. And right now, I mean, we said it for a while, we're a little overextended. So why you would do anything but take lunch money at this point in time is beyond me. I mean, you've said it recently, like even your big wins are just hedges that went the other way,
Yeah.
which I think is smart. You know that the conditions aren't great, so grab one to the downside just to kind of cover your ass on your upside exposure.
Yeah, and I mean, it's really essential in options, and it's why the puts are short expiration, because they are kind of quick hitters. Because those moves down get really aggressive, and so I will say this: if people in this room, if you know even what sand is, you're ahead of 99% of people trading, especially people trading options. So we do, and we will continue to find safer waters in individual sectors. Because what most people are doing right now, it's like, oh, Nvidia was down 10% Friday. Calls at the bell. That's the strategy that almost everyone on Twitter is using. So we don't want those habits in here, and I don't think. I think a lot of people. I think they are trying. I think there's some bad habits that they need to unlearn, and then just an honest assessment of how much time you have to put into this.
Yes.
And if you don't have a lot of time, you can still make money in the market. You're a swing trader, and that's a whole different scenario. It's probably not options. So we'll work around that, but just know your situation, know who you are, know how much time you got, all that. So yeah, okay, okay, I feel better. All right, all
I'm
right,
here.
good
I'm
deal.
here to help on that swing trade, and that's how I started. I was working. Like when I first started trading, I had a job that I couldn't really stare at my phone. I wasn't watching volume back then. I'll tell you that. We were just buying stuff we thought would do good, and or that was undervalued at said time, or that I believed in, and I could follow the news a little bit. News has always been something on my radar, though. So I would find a beacon, a North Star for yourself in that regard. But yeah, you can take your time. You don't have to start out day trading or 15-minute trading, and I mean that's not even a day. You're not even the whole day. Um, and I don't think it's a great place to start, to be honest. It's like going to the batting cages and going to the 70-mile-per-hour machine right away like that. Hit the small ones first. That's just me though. I know the time
Yeah, no,
the
I would.
time is the problem, and not everyone has the luxury
And I
of
mean,
time.
option returns are attractive to people. I mean, I like trade options. I get that. There's just there's ways to protect yourself and be safer and just if you just check your greed. I think a lot of options trades that go to zero or go down 80%, a person was green at some point in that trade.
Yes, yes.
It was probably 15% or so. And it's like that wasn't enough. So they let it pull back and then they start hoping. So
Oh, that's one thing
um,
that pisses me off is like the mindset of I can't re-enter. You know how many
yeah,
trades that I enter from it may be just the share side. You can correct me if it's not your side, but you know how many trades I enter that it goes up 10, 15 cents. I put my stop loss 3, 4 cents above what I was trading. I trade shitty pennies, guys, so it's not a lot, but that comes back and hits. The whole trade's gone. I mean, luckily I have capital in the account I can re-enter, but it's better to do that than just watch it bleed out a couple $100. I'd rather take 3, 15, 30, whatever it is. It's still a green or close to even trade, and instead of just this has to make me $300 or I'm gonna watch it go red. That's just foolish. Like you have to be more strategical with what you're doing, and that first initial response when you do get a green candle, even if you get washed out, it's make sure that wash is a little bit green and protect yourself, and you'll feel more comfortable entering trades. Very rarely will you enter it and it'll just drop down instantly. And scaling in will also help you in that regard too. But see green, make sure you stay green is the best way to do it. Um, you can re-enter. I don't know why people think this is the one trade I'm going to have all week or this is the one trade that's going to make my week. You don't know that, but you know you can manage it so it ain't the trade that costs you your ass. So do that.
absolutely.
That drives me
Um,
crazy. That does drive me crazy.
Real quick sector looks, and then we'll get into spy.
Is it airlines? Sorry.
Yeah,
Yeah,
yeah. Airlines. I think United they kind of set the tone, and we're going to see how um, the others respond because there's a lot of room above
if
in
Unc
a number of
mentions a whole
those.
goddamn sector, pay attention. That ain't my game. It's
I will
not.
say, Southwest Airlines they've just never been the same since that they had that fuel prepay deal they did. Do you remember that?
Yeah, yeah.
Like they had, and it's yeah, but but yeah, the leader's going to leave Dal and UAL, and then AAL is intriguing because it's cheap and I can buy a lot of it. But yeah, we'll be back on those. Not to mention the small ones. Yeah, Blue Save.
Yeah, that merger
Yeah,
looks like
lot
it's
there.
back on deck.
Yep. So yeah, so real quick on a couple things. Copper is just kind of checked out. It did what I thought it would when it built strength around 375. We're working on 450 now, so um, that can just go on and on. I mean, especially if inflation is back, um, copper could really keep going. So it's hard to enter something like FCX up here, but it is doing what I thought it would. It's going to be about finding some of the laggers. South America is still a place to look for metals. Aluminum, similarly, my line in aluminum was 203, 242. I can go to 300 or 280. So AA you know, can go up $20 from here. So I would stay on ones like that. Look, AA in particular, let it have a bad day or two, and we'll see how it responds. So those, those still look good. Gold's way checked out, and a lot of the miners are still behind. Um, Silver, same deal. I think silver's going 32, 36, something like that. Um, so those setups are all still there. Safest entries to me in metals, and it is a metal, is uranium.
Yeah.
Uranium's just kind of parked around $90. That's probably going to go back and test 100, 110, something like that, and that's where use get to 8 and keep going, and UEC as well. So that to me is kind of the best of the metals in terms of entry, but they're all pretty healthy right now, and I don't really see that changing. Oil, real quick. Be very careful about chasing news in the Middle East with oil. That's just kind of noise to me, and that usually sells right off if it goes up pre-market. But oil's still in a good spot. I think 92, 96 is probably where we're headed for oil this summer. So again, look for laggers. I look for, well, number one, offshore pipelines, midstream. Like those are kind of my focal points, and those stocks are pretty cheap. Share side, not. I mean, they're under $20 usually. So we got a lot of opportunities to work in that environment, and Exxon should have already been in it. I wouldn't buy it up here. So even though I do think it goes much higher.
What about soda ash? I'm just playing.
Yeah,
uh,
I might have some of that.
I've been following that since you said it because I got a commodity list that I just look at all the prices, and when I see it, I was like, oh, let's watch that a little bit. Um, for me, and it's probably a good reminder of how to use the work to people. I don't try to act like I know commodity prices or what I know their ranges. Maybe a little bit on oil because I was an oil ETF trader before I met Professor. But I listen to him and write down the ones that look like they're going to have some north movement to the green side, and then I just apply my system to those charts. So, he gave a couple there to go look at in sectors that are not necessarily lagging, that there's just a divergence in the price of the commodity and the prices of the stock. Um, and I do like uranium. I mentioned UUU last week, so anyone that bought that probably
Yeah.
going to do good this week. Um, yeah, yeah. So find instead of just directly trying to tie the work to a trade, take the information, ingest it, and then apply it to your system. A lot of these sectors, people should have one or two tickers for each commodity, and if you don't, I would start working on that now. It's never too late because the market's going to cycle. When we first started, I watched oil. I watched Oxy go from like $30 to $60. Um, but I paid attention from then on and was able to trade most of the oils probably 8 or 9 months later. Um, and not all at once, but they all eventually fit my system, and they've all been tradable from MRO to Dino to Oxy. I don't really trade those $100 ones, but Southern Copper was 100
Rig
bucks.
was a good one.
Rig, yeah,
Um,
yeah.
and 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 rig I mean, 60 to 100% move is already built into the stock. It's just about you know those deals taking shape. I mean that's kind of the look to rig for me. So I think you
2026.
kind of can rinse and repeat up until then, but definitely plan to be in it for that. And then the Bitcoin thing, I think for a lot of people in crypto, this is the first halving that they've seen or been in or whatever, and anyone expecting moonshot as that clock hit zero on that's not really how it works. But I do think that there's going to be some really exceptional range coming up, and miners, some of them did pull back to a spot where they're
Yeah.
they're worth a look. So it should be an interesting week for crypto, I think.
Yeah, that sector's weird. It kind of rocks people in with the whole sector moving. And then the other 8 or 9 months of the year, it's really fragmented, and you have to trade the best ones. Um,
Yeah.
but again, another thing, another sector where you just kind of follow along, find the ones that fit your system. Like I'm not trading MSTR, really not trading coin anymore. Um, but there's ones that fit my system that are very very tradable. So and instead of following word for word the information, trade for trade, strike for strike, find what works for you off the information and trade those. That's the best way to
Well,
go.
and it's funny too. I got to do it with some Mara people. Um, that these people are so severely bagged on Mara, and I just think back to what our level was on it and our understanding of stock. And you don't want to buy that at 28, $30. You don't. And you also don't want to buy it here in the hope that it goes back to 30. It'll go back to 30, but it might go back to 30 from 8. You know what I mean? Like
Yeah.
it's that kind of stock. Um so yeah, I mean people build their whole identity around some of these stocks and their entries are just so bad. They just bought the top and now we're just trying to be good at social media. So it's always amusing to me.
Yeah, I went
Um
back on Mara. I went back to our 2022, 20, I think it's 22, 23, first of the year video, and I just recorded when we had that conversation. I mean, you called that at $3.
yeah.
Professor's Purple Line that we were just trying to get back to kind of flip to a bullish from a sell off was the 650. Um, I already had 10 and 17 on my chart back then. I mean, this thing is
Yeah.
higher load off our levels. I mean, if you're not in that mindset of this is 300% from where it was when we started trading and versus this is sold off 10%, you're just an asshole.
Yeah. Yeah. Yeah.
Let's do some spy, or you got something else?
No, spy. I'm ready. Um all
I
right.
want to start.
So
I want to start. Oh, let me hop on this real quick. I want to start by saying
okay.
the market pullback. It's totally back to that environment of the market's pouting because people finally figured out we probably ain't getting rate cuts till Q4, if at all. The Feds talked about it all last week, and they pounded the table enough that I think it's gotten into everybody's head. So that's just the natural pullback. Why? Simply put, some of these business operate off of debt or rates are important, like Zillow is a good example. Interest rates are very important to growth of that business because people buy houses and got to pay got to pay whatever the asking rate is at the point in time. Companies with debt like Red Robin and that's the best example I can think right now. I mean they're $9 billion in the hole. They just got to refinance their debt at this rate. Those bills come in regularly. It's not just like one lump sum.
Yeah.
They have part of the money they got to refinance here, part of the money they refinance here, and some businesses are so tight that that's their profit margin. So understanding those kind of businesses that can be successful in a high interest rate environment is very very important at this point in time. And we definitely got a little overextended from our September to January thesis, but we got an extra 4 months out of that one. I mean, this market has
Yeah.
done amazing. So expecting pullback, maybe doing a little more work during this pullback to see who's going to be first again. So you can be first on the bus is the best thing to do currently because I don't think it's over until we get down to those numbers that we're about to talk about. Go ahead.
Yes. So I would say that, a couple things I see. The 480
Yeah.
area is still really crucial. Those July 480s have a lot of strength to them. That doesn't mean that's the bottom, but that's a magnet, and then I kind of think if we get there, we get a big jolt below that, and then we go from there. So that's kind of big picture what I'm seeing. I will say though, I want to throw this out there that there are some big positions building for September back at all time highs and above. And so these are orders. in the five to tens of millions at 520C, 530C, 540C, or 920. And so those have a lot of time. Those people are way hedged. They're probably the same people, in the downside stuff. But in terms of when we do bottom and recover, I think we are going to retest the all time highs. So the timeline for me is kind of taking shape there. That doesn't help on like kind of a week to week basis, but big picture, that's where I'm at.
Well, yeah, we're gonna. I mean, it's pretty simple setup. It just is gonna take time. The whole world knows people aren't patient. This market's gonna pull back, and it's gonna retrace when we get the first rate cut. It's that simple.
Yeah.
The big money's
Yep.
gambling. Starboy's account, it must be his millions of dollars, is is gambling that
Yeah.
that's going to be in September. They're just guessing that it's going to be at September in the Fed meeting around that time. That's what they're
Yeah.
hopeful for. That's their first. If you want to be early or they want to be early, that's what they're thinking. So they feel like they're buying up cheap contracts on the sell-off that are just going to come right back when we do get the news. I mean, that's that. Yeah, we just that was exactly the theory behind September to January the first time, is that we're going to get a rate cut in December and or January or February, and we just didn't. The abnormal or divergence for me was that we ran for another 2.5 months, um, kind of knowing that we're not going to get the six cuts, the four cuts, or any cuts. So I hope people see the power of the move that will come when we do start to cut rates.
And and then I mean, there's real quick on. I mean, obviously, like semiconductors are a huge part of this move down. Uh, Problems they're having are already in the earnings report of the smaller ones. I said that when it happened, that like AAOI and RMBS and some of those that they got killed on earnings. The very same reason that SMCI is struggling right now. So that story, the longer that persists, more SPY is going to pull back, and there's really no up in that. So yeah, dip buying SPY here because you think it's going back to 520. Unless you're hedged on the other side, I wouldn't really be swinging that way. But what do you think for numbers this week?
Um,
One, we both didn't predict this much down, but
no, we had real just for transparency, 502. You had 504. I had. We both didn't see it breaking five. But
yeah,
our top was 14 and 15, and the top was 15. So we kind of had the top, just not the pullback. A lot of Friday selling
yeah,
kind of caused that. So I don't think we were. I mean, I said last week, get ready for a shitty week. It just was a lot shittier than I thought.
yeah. No, I thought. I mean, Friday, especially with the options expiring and everything, I thought that was the day we would get back to 501, 502, something like
Yeah,
that.
yeah. Well,
So
there's a
yeah,
lot of earnings this week. So it's the question, simple A or B. Does that prop the market up here and kind of hold around 500, or are those just going to be so ass that we get another jolt down? I mean, that's your two. I don't think they're
yeah,
gonna. I
yeah.
don't think we turn
Um,
around here. I think we're both on that page. We're not turning the boat around here. I mean,
Google, Microsoft can stop the bleeding. Especially Microsoft is really strong, and they have a lot of money, so the interest rates don't really impact them that much. But again, I think it's kind of stopping the bleeding or slowing it. I don't know that if they can turn us around. Um, so I'd be hesitant about that.
I mean, I'll throw some numbers out there just because the top.
Yeah,
I'm a little more confident in the top, but um, I'm gonna go 506. 69, shout out Goose. Yeah, I just don't. I think if we get back into the fives, it's not going to last for long, and it'll pull back. And then my downside, I'm just kind of guessing. I mean, I think we're going to 470. The way I'm looking at the market right now, is it going back to the 50 on the weekly, or is it going to go all the way back to the 200 on the weekly? And the 50 right now is at like 265. The 200's at like 410, 412. So I'm a 50 guy just because it lines up on level two. I really think we go to 470 here short term, not this week. So it's finding how much more pullback. And with what I seen on Friday, if we shit the bed on earnings, it's gonna be quicker than anticipated. So I'm gonna go like 482, 82 this week. So pretty big range to be honest with you, but I think we're gonna have drastic moves. There's just way more room down than up currently.
Yeah, the some waterfall charts taking shape in
Hmm.
semiconductors. So I've been trying to get 10 shares of AVGO for a long time now. I have eight, so I'm looking forward to not paying $1,300 for those last two. And in my thinking, I want 10 because I think it's going to split
Yeah.
10 to 1. I have 100, maybe it'll be 4, but whatever. I'll have a lot more shares than 10. That's the idea. So anyway, yeah, the tops are easier now that there's actually some candles to look at.
Sure.
Because I do candles and strikes and kind of line them up. I'm going to go 505.25 is going to be my top.
I'm
So a
close again.
little below yours, but same kind of idea. And then I'm looking at 485.13 bottom this week. A little tighter range, but
Do you have something
combining them.
around 45 that makes you think that?
Yeah, so it's not the strike at 485, but it's the movement that'll do to July 480 and in anticipation of May 500p getting a roll this week, and then where I think it'll land.
Man, we were just asking a 520 or above or below. Now we're gonna have to ask. I mean, I think 500 above or below closes Friday.
Well,
Yeah, I think we're both there as well.
because I think if we have a couple bad days midweek and the recovery happens Friday, there's going to be a limit to how much
Sure.
weight Microsoft can pull at that point. So,
Yeah, don't
and
get. I mean,
Google's a little more of a wild card. Like they can have bad earnings. Microsoft, I don't think is going to have bad earnings.
I would up your standard right now. We're gonna have one good day in this, like a week in these conditions. It's just natural relief. It happens. It's don't get rocked to sleep until you get a couple good days coupled with good volume. Um,
Yeah.
yeah,
Well, this is
larger
why.
time frames.
So I posted AVGO chart, and of course, the guy who used to be in the room is like, shorts question mark. That was his only reply. I'm like, this thing just dropped like 10% in in 7 days, 7 trading days. So you're wanting to enter puts here. No, I mean, because if you do that, the 1-2% relief in the morning or whatever is going to kill your trade, even though it is going to go down much further. So yeah,
Sure.
the intraday relief rallies. If you're like a scalp trader, great environment for this. Just don't think you're going to get. It's going to sustain that. That's kind of my mindset.
Take your sandwich. You ready to get to work, P?
Yeah. Yeah. Let's do it. I'll grab a coffee and we'll go from there. So like, subscribe, retweet, that stuff. Just